With people trying all these new things and it being difficult to discover whether the churn or traction, how how do you navigate the mess? Like in your regard, do you just really focus on the founders and their experience and their direction if they're well equipped for a pivot, or do you look elsewhere?
I don't even think if it's a pivot, but I definitely think, listen, it comes down to the founders, right? We're
Mm.
investing at the earliest stage. We definitely like to invest in things that are non-consensus that maybe, aren't the most interesting. We've been investing in like wealth tech and wealth management technology for, 5 years or more. I don't think that was really a exciting industry up until maybe the last year and a half for other venture firms. And even now that it's exciting for many, there's a lot of parts of like just wealth management that are still boring or under thought through. And so like founders that have experience, a problem that they've encountered in their life that they want to go solve, but that also is a multi-billion-dollar opportunity. That's exciting to us. I think that we're more vertically focused and more industry focused. We're not investing in like the next Zoom info or like a generic sales enablement tool. It's just not something that we can like really, I think, wake up every day and be as helpful with. And I think that's also most of us have been out of that industry seat for many years now, so we're not as in touch with like the day to day of like the generic salesperson.
For sure, for sure. Do you mind double clicking a little bit on the wealth management and like what over the last 5 years, like what excites social leverage and in yourself?
Yeah, I mean, I think there's like two things. Like, if you think about wealth management, like obviously you have Morgan Stanley and Goldman Sachs and all these, but you have thousands and thousands of independent registered investment advisors that manage as little as 50 million that, manage upwards of 25, 30, 40 billion dollars. And every piece of the wealth management technology industry is like slowly being rebuilt. Financial planning, direct indexing, access to alternatives, tax, estate, audit, all these different things. And then I mean, that's just on their end. And how do you obviously make it more efficient for them to do things quicker, more efficiently, have a digital, strategy for their end consumer. But then from an end consumer perspective, wealth management hasn't really changed in a long time. Obviously, Robinhood's getting into it now and trying to make it. We've had like, the robo advising trend of many years ago, but there's so much of wealth management that is still broken and has such a better opportunity just from not only the end consumer, but also to make the advisor's life easier. And then there's a lot of boring parts of wealth management. There's securities class action claims, right? Every year there's 10 billion plus in securities class action claims, which is like maybe Google was sued and they settled for 400 million. If you own the shares, you get paid. We probably all have gotten this in the mail. You're thinking you're going to get like 3, 4 bucks. A lot of the times that 3, 4 bucks is actually a few $100 because if you show up, you get paid. If you don't show up, the money just goes to everybody that showed up. But
Mm.
processing that paperwork and doing that across, typical wealth manager, if they have a client, they may have 6, 7, 8 accounts, right? They have an operating account, they have a savings. Doing all that at scale, they're gonna say like, I'm not worth doing that paperwork. It's crazy, right? 70% of wealth managers don't actually do the paperwork for securities class action claims. That's a lot of money. It's a great opportunity for somebody to come in with AI and automation and build something that like, collects that $10 billion and takes a small fee for doing that. So, that type of stuff, like when we see something like that, that excites us.